I want to first get your thoughts in terms of what the impact on gold is going to be with all the focus this morning on the yield curve inverting.
Well, I think that gold certainly is that safe haven asset, and what you're seeing is really gold responding almost instantaneously to news. As you said, gold dropped $50 when Trump came out with his delayed notice. And if you look at yield curves as you move forward, I mean, they're headed, Treasury yields are headed to probably, around the 1% mark in the not too distant future, and that's all going to feed into support gold.
Yeah. In addition to some of the concerns that we're seeing here globally, as far as economic concerns, geopolitical concerns, also, it seemed like that kind of gave gold that first initial lift up and through 1,400 when we were hearing about tankers in the Straits of Hormuz that were being hijacked and basically taken over by Iran. But ultimately, even with the dollar strength that we've been seeing, gold has remained fairly strong.
Yeah, well, gold is always that safe haven asset that people ultimately will flee to. If you go back over the last 4 or 5 years, gold has really range traded. And there's been a lot of geopolitical activity in the Middle East, some of the initial stuff with the Trump-China trade war, and gold didn't really react very much. But once you saw it breaking through 1,400, 1,420, it was then on a bit of a march. And if you take what was, sort of around, 12 months ago, and then you add to it Brexit, you add to it, some of the real rhetoric that's going on in the trade wars at the moment. You look at geopolitical uncertainty, the Argentinian election, where, the government there really knows that it needs to implement austerity measures, but the population just don't want it. Somebody's got to pay for it. And, the governments that promise the most free stuff are the ones that tend to get elected. So the chances for meaningful macroeconomic reform really have diminished significantly in recent times, and that's all feeding into supporting gold.
So you mentioned in your notes some demand for the physical that we've been seeing from the banks as well.
Yeah, certainly. If you look at physical demand at the moment, there's a lot of central bank buying. The Russians are probably the biggest buyers on the planet at the moment, but there's a lot of gold going into China, but not for retail demand. It's really going into feed the PBOC.
And what are we seeing in terms of ETFs? Because we've seen increased flows there as well.
Yeah, look, absolutely. And ETFs are a really convenient way for people to get in and get out of gold very, very quickly. A lot of the big trading houses actually use the ETFs to hedge their positions overnight. And you are certainly seeing a flow of money back into the ETFs, reversing previous trends.
So we've mentioned some of the geopolitical tensions that have helped lift gold and keep it bid through the 1,500 level, again, recently to 1,550. But in addition to that, also rates to the downside, in theory, has helped, or concerns associated with rates to the downside. But one thing that's been interesting is the U.S. dollar, which has been, for the most part, trending higher, holding near multi-year highs. But really, a strong dollar has yet to impact strong gold.
Very much so, and that's unusual to see this sort of relationship. But if you look at currencies globally, and you look at what reserve currencies may be out there, the RMB, China's perhaps not the most transparent market, although they are trying to make it a lot more transparent. It's nowhere near as transparent as, say, the US market. The euro's in a whole world of pain. The pound obviously has been significantly affected because of Brexit. So, if you're looking for somewhere to park your money, if you're looking for a currency to actually still have as that global reserve, the US dollar is it.
Yeah, especially with the rate differential as well that we've been seeing. I mean, there's really no place else to go. What does all this mean in terms of gold moving forward? Not in terms of predicting price activity so much or levels, but just in terms of the bigger picture. I mean, should we continue to expect to see underlying support?
I would imagine so. We're not in the business of predicting the gold price, but what I can say is that there is reasonably strong support at these levels, and you'd have to say that the price is biased towards the upside as we move forward, given everything in the world today, and given that there's no real sign of any solutions to some of these deep-seated global problems.
Okay, can you talk to us a little bit about what you're seeing in terms of the Perth Mint Physical Gold ETF, that's the AAAU?
Correct, yeah. So we were very fortunate to actually do the bell ring on Wall Street for that in August. And we are seeing flows into it. We're certainly seeing interest, not only retail interest, but we are talking to some institutions as well. And that all bodes pretty well for it. It does have some unique features as well, like being able to exchange your shares for physical, which do make it attractive, certainly from a retail point of view.